Hey traders, welcome to the Forex Market Analysis session. My name is Alexander Nikitin. I'm a professional trader and the creator of MPS software. Okay, if you are interested in the trading opportunities that I have on my radar, here are they. Aussie New Zealand 4 hour, Aussie dollar 4 hour, Euro Aussie 4 hour, Euro Canadian 1 hour, and Pound Aussie 1 hour as well. Okay. And in today's video, I want to talk about the new way of identifying candlestick formation, the new way of reading the price action. And it is very important that you understand what is the powerful candle, what is the weak candle, I mean the powerful bullish candle, powerful bearish candle, because they will tell you if the price is going to continue at least the few next candles, or it's going to reverse at least for few next candles. Okay, and to make things easier, I have created this indicator today, 4 hours ago maybe, 4 or 3 hours ago, and this shows if the candle is powerful bullish, or it is a powerful bearish, or it is an indecision candle. So it's actually what candlestick formations do. They show you the formation and they say this is a powerful bullish, this is powerful bearish. Well, I think we need a drawing panel to explain this stuff in details. What is a powerful bullish candle? It is a candle that has this formation, for example this one. Yes, so it is the low, it is the high, and the body of this candle looks this way. It starts here, doesn't matter where it starts, the open doesn't very much matter, and it closes very close to your high. So that's why it is called powerful bullish. So do we have some other variation of powerful bullish candles? Of course, sure. We can have it this way, starting from here and closing here. Yes, is this a powerful bullish? Yes, and it is typically found in the bottoms, signaling a reversal. This one is typically a continuation candle, so if we have something rising and this candle breaking the support, the resistance, it simply signifies it is the confirmation of that break of support and resistance. If this was a support or resistance, breaking this way means that we will most likely continue higher and higher and higher. And the second candle, this one, because it has this large wick to the downside, it is a reversal candle mostly. It is found in the bottoms, so it means before that we had some kind of downtrend, and when we have this powerful bullish candle, it reverses the trend. Maybe we have some reaction to the upside, maybe we have something else. Okay, what are other kinds of powerful bullish candles? Like this. Is this a powerful bullish candle? Yes. And what are other kinds? Another kind. Like this. Is this a powerful bullish candle? Yes. So what is in common within with this 1, 2, 3, 4 candles is that the close of this candle is very close to its high. So the up shadow is very small. That's why it is a powerful bullish candle. And it doesn't matter where is the open. If we have the open in the bottom, then we will have that very large expansion day. It is called a trending bar. And if we have that open in the middle or closer to its upside of the range, then we have these powerful bullish candles that typically reverse the trading trends. Something like this. You see this powerful reversal candle, this powerful reversal candle, something like this powerful reversal candle. So at least few candles after that are having that bullish momentum. Okay, as for bearish candles, let's draw bearish ones. I will delete them all. So I will draw all the bearish candles, all the variations. So I think we need to draw it this way. So they all have very small downside. And the upside candle can be, upside wick can be of different size. Yes. So these are powerful bearish candles. Actually, the color of that, it doesn't matter. But of course, in this case, this will be red. In this case, it also can be red. In this case, in the majority of cases, it can be red. But in this case, it can be slightly green. 1 decimal of pip lower than this, it can be slightly green. So you never know it. Like here, it is a powerful bearish candle. This one, the small one, yes, that I'm pointing to. But the close of the candle is lower than the open, and that's why it's red. But it is a powerful bullish candle. Okay, so what is the rule to understand which candle is powerful and which is not? So if we take here, from here to here, the distance as 100% of range. So if the candle close appears below the 20% level, yes, let's say this one is 0 and this one is 100. So if it appears, the candle close appears somewhere within this range below 20% of total range, then it is a powerful bearish candle. And the rest, it doesn't matter what is the wick, whatever. It is a powerful bearish candle. If you find it in a downtrend like this, then it is a continuation. If you find it in an uptrend, then it is a potential reversal. It is a powerful bearish candle. And vice versa. So if the candle close appears at the top 20% from 80 to 100, then it is a powerful bullish candle. If you find it in an uptrend, a powerful bullish candle, then it is a sign of continuation. But if you find it in a downtrend, then it is a sign of continuation, reversal, sorry. Okay, so this is the new way of looking at the same candlestick formations, and you can have them, all the candlestick formations have this rule. You see that? All candlestick formations have this rule. All those reversal candlesticks, continuations candlesticks, they all have that rule. And even if you have 2 candle, 3 candle, 5 candle, yes, combinations, look at that. Let me delete that stuff. Okay, it takes time, so be patient, please, guys. We had a bearish candle, yes. It can be a powerful bearish candle or whatever. Powerful bearish candle. And after that, we have, let's say this way, a bullish candle. That is this, maybe this one, like this. So we have it this way, and we have it wick somewhere here. So if you look at this candle combination, this is a bearish one, this is a bullish one. This pattern is called a piercing pattern, yes? It pierces to the downside. If it extends and engulfs the body, then it is an engulfing pattern. But if it is simply crosses the half of this candle, it is a piercing pattern. And look what happens here. If we talk about these 2 candles, like this, if they were one candle, if these 2 candles, for example, it is 1 hour, 1 hour. So if you go and look at 2-hour time frame, so these 2 candles will look this way. the high of this candle, yes. The open of this candle, it is here because it opened here, then it traveled to the downside, install low, install close, then it travel low, install low, travel high, install high, and then it close. So this will be the open of the candle. This will be the low of the candle, yes. And this will be the close of the candle. So what will you have? Your body is this from open to close, yes. Your up wick is this. It is very small compared to that, yes, up wick. And your down wick is this. So what is it? It is a reversal candle that is called as doji, and because we have this distance that is somewhere less than 20% of total range, then it is a powerful bullish candle. See that? That's why we need the requirement. We need the requirement for this candle to close above 50% of previous candle. If it will not close here, if it closes here, then the candle will look this way. It is the close is not higher, but somewhere here. Yes, it is not 20%, the top 20% of the total candle range. Understand? Okay, 3 candle combination, 4 candle combination, they all are here should be examined this way, and they can all be simplified to 1 candle combination. So you simply look at what was the maximum between the 4, the minimum between the 4, what was the first price between the 4, that is actually the open, and what was the last price between the 4, that is actually the close of that 4 candle combination. And after you draw the total candle, then you examine it. What is the up wick, down wick, where is the close of the candle compared to its range. Okay, so now I hope you understood what is this indicator, what it does. Yes, it draws where is the candle close. If the candle close like this is in the bottom of the range, then it is a powerful bearish candle, yes. So like this, this was a powerful bearish candle like this. It shows that it is below 20%. I enabled 20%. 50% is indecision. So this candle is indecision like this. When you see that, you need kind of confirmation to the upside, to the downside, and so on. So you see this candle that confirms a bullish momentum, then the bullish momentum is conflicted. You have bearish momentum, slight continuation of bearish momentum, then you have kind of indecision because the close of this candle is 50, somewhere here, and then you have a confirmation of bullish momentum like this. Then you have a conflict situation when you see the bearish momentum, then you have bullish momentum. Once again, it is almost powerful, but I call it indecision. And then you have indecision, and right now we don't know it yet. What is the candle? So you typically have that conflicting signals within sideways movements, but within trends, it's pretty obvious. So look at this trend. It is continuation, indecision. You see that? Showing you the reaction. That's why this candle shows another kind of thinking momentum, sideways movement, kind of sideways movement. Then we have sign of continuation again. Then we have indecision, indecision, and then we have, look at these candles, 1, 2, 3. We have momentum slowing down. Although these candles are giving you more and more profits, but they are weaker and weaker and weaker, you see. And that's why it is pretty obvious that we had that kind of retracement to the downside after these candles, you see. Okay, and then we started sideways movements. Finally, if this candle closes above 80% of its range, then it will be a very good sign of breaking the resistance. So we've been moving sideways, 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 boom, it is a break of resistance. Now let's go to trading methods that I use. This is the candlestick formation, and I will use that entry technique using this indicator to simplify all the testing, to simplify all my price action reading. And let's go back into this example, yes, and I want to talk about this godly pattern. It completed here. Let this triangle be not red but something like this candle. Okay, so you will see it in a second how it looks like. Okay, so you see this and this is the pattern that I'm looking at. This is the unified godly pattern that I use in my trading. Okay, let's draw a reversal zone like this. The reversal zone is the zone from completion of the pattern towards its invalidation, and let it be powder blue. Okay, powder blue seems to me very nice, looks very nice. Okay, let's try to trade it. What we have 54.2. It says that the time frame of 4 hours is too large. Because of this 3 ADR distance, we need to switch into 1 hour time frame. Okay, 1 hour time frame. And here I will present you a new trading technique for that. It is not conventional one. It is something that I am right now working on, and it shows very wonderful results, although I didn't test it properly yet. But the idea that I want to share with you is promising. Okay, after the completion of the pattern, you see that we have a candle. We first, to initiate the trade, we need a powerful bearish candle. That's it. No candlestick formations, nothing kind of patterns, nothing. Simply look at this indicator or look at the candle close. So you need one candle close within this blue zone, yes, that is the candle close is lower in the lowest part of the range, below 20%. So I think you understand what I mean. And guys, this will be your trigger. The rest is pretty simple. It is known that if the reversal starts, it should the reversal should complete within the 3 ATR range. So this distance is actually the 3 ATR range, and this distance is 54.2 is the initial take profit level of 382 that is conventional. As I'm not going to use this take profit method in this approach that I'm demonstrating to you right now, then the take profit doesn't matter, and I only use this number to choose the correct time frame, the time frame that fits this pattern best. That's why I switched to 1 hour. Okay, and if we go further, then let us do a kind of trading of that. Yes, I will explain you what are these lines. These lines are 10-day high, and this line is 10-day low. Not day, of course, it is 1 hour. 10 candle high, 10 candle low. It is the highest high within the last 10 candles, and it is the lowest low within the last 10 candles. It is needed to cut your losses short and to maximize your profits. Okay, hope you understand this. Let's go trading that. First of all, we'll need the range within which, during what range our reversal starts, and it is the 3 ADR range. Yes, it is 35.8. So how can I draw the rectangle of 35.8? It is 78. 35.8 78 sharp will be my range. Yes, everybody agrees. Okay, so after price enters my reversal zone, my rectangle, blue rectangle, yes, then I look at the powerful candle that is bearish, powerful bearish candle. So this one is the first candle. Okay, so I enter at market. I enter this trade at market, placing my stop loss, initial stop loss, here, like this. So you see this? I entered here, placing my stop loss 380 above. And if reversal starts, then I am in a profitable trade. If no, then I will look what I can do else. So this initial take profit, stop loss is 35.8. 35.8. Let me type it here in the label. 35.8. This is my initial stop loss. Okay, now look at what should be done. After this trade, price moves against me, then it moves lower, and you should pay attention to this 10-day low. The 10-day low, pay attention to that. So it didn't hit here, then it goes against me again. Okay, and this one, this candle, this low is lower than previous 10-day low. That's why we have it sloping to the downside. So this candle crossed 10-day low. After that, what I do, I start trailing my stop loss. So I place my stop loss level to 10-day high. When I have 10-day low, I place it to 10-day high. Next candle, my stop loss is the same. Next candle, my stop loss is the same. Next candle, same. Next candle, still same. Next candle, same. Next candle, same. Next candle, lower. My stop loss should go lower. And only after that I was broken to the upside. Okay, initially I had 35.8. So what is my loss right now? It is carded 26.5. 26.5. 26.5 pips. You see? So what I actually did, trailing the stop, I cut my losses short. And if you calculate that, 26.5 divided 35.8, instead of full stop loss, I will only have 74% of that stop loss. I cut my loss by 1/4, by 25%. So my stop loss is 25% less. Okay, after that, look at this range. We're still in this blue rectangle. If we are in this blue rectangle, our pattern is still valid. If our pattern is still valid, then we'll look at our next trading opportunity. Okay, after having this stop loss, what we need to enter? We need a powerful bearish candle. So after this, we have this bearish powerful candle. When this candle closes, enter at market. Our stop loss also initially goes 380 above this candle. You see that? So our second trade within this pattern looks this way. So this is the initial stop loss. What price does? It starts moving our direction. Okay, let's calculate. The initial stop loss is 35.8. Again, it is this same. Yes. Moves here, here, and here. You see, it is the last low, 10-day low, and here it is the new 10-day low. This one installs new 10-day low. What we do when we have new 10-day low, we place our stop loss to new 10-day high. What we did in this case, we cut our initial loss by half. You see, it is in the middle of that range, of initial range. We cut that by half. So next candle, stop loss is the same. Next candle, the same. Next candle, stop loss is the same. Next candle, same. Next candle, same. Next candle, it starts moving. So it starts moving. Next candle, it still moves. Then it is the same. Yes. Then it moves lower, lower, and lower. And this candle stops our out. And what you should look at is that our stop loss was below our entry. So we protected our profits. So in this very trade, we had what? 2.4. 2.4 pips plus 2.4 pips. It is plus 2.4 pips. It is a winner of 2.4 pips. You see, although we hit our stop loss, it is still a winner. After having this stop loss, we next look at some other trading opportunity within the same range. So this was the stop loss. Look at the indicator below. After the stop loss, nothing, 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 nothing. This one is very powerful candle, like this. It is very powerful. This means that we should enter at market, but because this candle stays within the blue range, within the blue rectangle. Our initial stop loss goes 3 ATR away from our entry, like this. Here, you see that? Price immediately starts moving into our favor. You see that? Here we do not install a new 10-day low because it is it doesn't move lower. So our initial stop loss stays the same. Then it goes slightly higher, then it moves the same, it stays, and at this candle is where we install a new 10-day low. Once we install a new 10-day low, 10 candle low, sorry for that, daily time frame terminology is very powerful. A new 10-day low, yes, so we need to do what? We need to place our stop to our 10-day high, like this. This way we protected profits of 13 pips, 13 pips profits. And then we go next and next and next and next. Price falls like a waterfall, yes? We go next and next and next. And we trail our stop loss, placing here, that placing here, that placing here, 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 and placing here. Then we place here. We trail it, trail it, trail, 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 and our lowest is here. And look what next candle does. It triggers our stop loss. So we are out of our position. And if we calculate what we have generated from the very beginning till the very end, it is plus 97.9. Plus 97.9. So the next trade here is plus 97.9. Okay, 3 results. I should type it as minus. Okay, minus. 3 trades within this pattern. Minus 26, plus 2.4, and plus 97.9. See that? Okay, based on my trading results, based on my paper trading results, not actually real-time trading, based on my backtesting and based on my research, it is kind of rare situation when we have that sideways movement and then we follow by that by this substantial movements. So typically when you have that sideways movements, you are minus 2 pips, plus 2 pips, minus 2 pips, plus 2 pips, and then nothing. So you stay break even. The majority of trading winners, they move this way, boom, the 97 pips, something like that. They move it like a waterfall. If you have it moving sideways, well, chances are that you will have it nothing, something like this, plus 2 pips, minus 2 pips. You will have it kind of break even. And very rare situations is when you entered and price hit your full stop. It is very rare to hit the full stop, the full 3 ATR distance. Very rare situations. Okay, so oh yes, about numbers. What I say, based on my market research, the probability of hitting a winner is 45%. It is less than 60, yes, less than the probability of aggressive trading, putting your entry here, your stop loss here, and doing active target adjustment. It is less, yes, than hitting the 382. But the expectancy, my best expectancy on euro dollar is showing 0.19 using ciphers. It is somewhere 73% accuracy of that pattern, and the risk to reward is 0.90 something. So it means that my average winner is 0.9 of my average loss. But in this strategy, yes, the average winner is 2.53 times greater than average loss. What are those average losses? They are always cut it, almost always they are cut it by 25%, by half, by whatever, and that's why we have them plus 2, minus 2, something like this, minus 26. They are almost never full stop losses. And the winners, they are not limited. Price may go and go and go and go, and 1 or 2 trades will make your bank for the year. Do you understand that? It is the rule of thumb that says 20% of trades give you 80% of profits. Other trades are something break even, but you can't do anything about that because every trade could result this way. Every trade that you have taken here, it could result this way. That's why you couldn't do anything about this. Simply take this trade, take next trade, take next trade. One of them is some winner, something like that. So the only requirement, they should appear within this sell zone, and the sell zone is found by this pattern. Okay, I hope you understood that. New approach that has tremendous, I'd say enormously large expectancy. The expectancy is 0.57. 0.57 is very, very large expectancy. So basically in each and every trade you generate more than half of your risk in each and every trade. When you place a trade, for example, $1,000 risk, yes, you expect to have $500 in each and every trade. So this means in some trades you have tens of thousands winners, and in some losses you have very, very small losses, and on average you generate $500 on each and every trade. So if you place let's say 10 trades, $500 multiplied by 10 is $5,000. Keep this in mind, that the expectancy. Although it is psychologically tough to sustain those periods of losses, the 45% means that you win less often than you lose. Okay, guys, as usual, test it. You test it and send me your results in comments, send me what you think, and actually what you think about this new way of looking at the candlestick formations. It looks wonderful for me, and it is very, very simple. Okay, and now that's it for today. I hope you like this video. If so, give me a thumbs up, share this video on social media. Until then, good luck, good trading. Hope to see you soon.